last time. You know what that means? It's time for first call. I am Victor Jones, but you're not here for me. You're here for the one, the only, the co-founder himself, or the founder. I shouldn't say the co-founder, Mr. Tom Sosnoff. Tom, how you doing, man?
I'm good. I just got
Yeah.
back into town. I'm ready to go.
Welcome back to Illinois.
Turn those machines back on.
They're getting ready to, my friend. Are you pumped? You pumped for this week?
Um, yeah, yeah, I think I am. I got a lot of positions on actually for a change. So I think I am.
I am. I'm pumped. I'm pumped for this week. What was your thought?
Why?
I don't know. It was a decent week last week. Energy was up. Nuclear was up. China was up. So I'm
Yeah.
excited. I want them to turn it
I'm
back on.
I'm pretty bearish in energy. I think this is a blow off. So I'm just curious. Like, I think that was the one that was probably the most. I think the two areas that were most interesting last week, because I don't think it was equities. I think were the bonds trading down to 122.
Insane move.
The long bond. I know. And I started buying them on Friday at 122 and just a few ticks under 129, 121, 29, 129, 130, 122 even. And so I'm right here. I'm just long. I'm right here. But I kind of like the bonds at this level. And maybe they go a point lower and maybe you sell some puts or something, but I can't see them going too much lower. That's all. I think the bonds are interesting here. And I think crude oil we finally have interesting crude oil because the IV rank is like 100 and something. I mean, I'm not sure we're closed on Friday, but it was up 120 in the middle of the week. Premium came in a little bit on Friday in there, but it got jacked. And so I kind of think that, it's going to be all over the place. I think you're going to have a down. I think coming up, you're going to have the upside's probably not done, but you're also going to have a down $5 day in crude oil come out.
Mm. So you think we could? What would that? So the correlation has been bonds lower, yields higher, and in those environments, you're getting sort of outperformance in the inflation or reflation trade. So that's like materials. It's kind of energy. It's kind of, you don't think like this, but like copper, China.
That. Yeah.
On the flip side, bonds rallying, you get tech outperforming. So if you're getting long bonds, does Tom Sosnoff also not short tech, or do you get net long tech if you get a bond rally, or you don't play that game?
No, I don't play that game. That game, no, that's your game. Like, I mean, I leave that game to the Victor Joneses of the world. That game is not a game I play at all. Bonds selling off here. I just like the bonds. I don't give a crap about tech stocks, and I would like to see slightly higher interest rates. I don't want to actually see lower interest rates. So I kind of like the bonds here, and I think they're going to have a hard time.
Wait, say that again? You'd like to see lower interest rates?
I would like to see higher interest rates.
And you're
lower
buying bonds?
Yeah, I'd like to see lower bond prices and higher interest rates. I think it's better. I think it's better for trading. I think everything's way more tradable when bonds are trading around 120, and they're not talking about like 8 Fed cuts and all this kind of crap. I kind of like it better. And since the 50 basis points move, I mean, bonds haven't even had an uptick. I mean, they've just been hammered nonstop, which means, I think the marketplace is telling a real story, and the Fed got a little ahead of itself, and I think Powell kind of recognized that last week. But the bonds are a one-trick pony. I mean, you can sell puts in there, and you can buy the underlying, and you can trade a bunch of different things around them. But that's one trick. And I think if you're talking premium, you got to go crude oil. I mean, crude oil's, this is the trade du jour.
Yeah, it was a big week for crude oil, and with it, all the energy stocks came with it. XLE was the outperforming sector. It was up like 6.8, 6.9%, something like that. The next closest sector last week was financials, and it was only up like a little bit more than 1%. So it feels like money flow is all one direction last week for the most part into crude and energy stocks for sure.
Yeah, I mean, I think that there's real risk in all these stocks, like for a huge ugly day coming up this week. Let's see where crude opened. It opened unchanged, but which is kind of surprising. But and bonds opened a little bit lower. They opened at 28, 29, 120, 129, 120, 130, which is the area that's about the low from Friday.
Yeah. Now crude oil right now moving lower.
Crude oil is right on the lows from Friday at around 74. But
net gas down 1.5% around there, something like that.
Yeah, but that net gas has been on a tear lately.
Oh,
I don't think I don't think the other commodities are that interesting here. Um, yeah, I don't think any of the other commodities are that interesting. I think it's all, for me, it's just bonds and crude oil. And I think those are the most interesting ones. And I think if you're not long bonds, I think this is kind of an area to nibble with some short puts or some long bonds. And I think this is the area you got to be short premium in, not a lot, but just like, whatever way makes you comfortable in crude oil because it's too rich.
The Nasdaq versus it's sort of strange because the actual small caps, you can find a handful of small and mid caps are just going nuts to the upside, but the actual Russell itself, it just didn't do anything last week. It was down 0.5%. The Nasdaq was up 13 basis points or something like that. Taking another swing at this one going into the week, long Russell.
I'm already long.
Nasdaq.
I already have that position on. I'm long Russell futures. So I'm long the RTY futures and I'm short the ES futures. I have no NASDAQ position on. I mean, I do have a NASDAQ position, but not directional. So I'm long Russell futures, short S&P futures. It was kind of a non-event last week. Maybe it was a small loser, but it was pretty much a non-event.
Yeah.
I think it could keep that trade on the whole rest of the year. But that to me is is a buy and hold trade. I think it's the best pairs trade on the board, but it's a crapshoot.
A buy and hold. Everything in energy was up. I know we just talked about it, but it wasn't just like you get the little pops in WTI, and it's easy to say that's geopolitical premium. But crude was up 10%, gas was up 8% last week, coal was up 7%, natty gas was up 3%. Like everything in the energy complex
you've got a
was
fun little
strong.
You've got Netanyahu throwing around. I mean he's not throwing around. It's not words. It's not. He's not just. He's not making idle threats. He's. He doesn't mess around. He's not. He's not. He doesn't cry a lot of wolf. He fires.
Yeah.
So it's unlikely there's not going to be some retaliatory strikes and they're going to be pretty violent. But I think a lot of it's already priced into crude oil, and that's all. I just think you've got a lot priced in there.
Yeah. Not only XLE, which was up 6.8%, but the industry. So XOP, this one was up.
Yeah, but Victor, they're all the same. They're all the same place. I mean, there's no difference. They're all the same.
Oh, they're same theme. They're very different companies and
no, I understand that, but I'm saying they're all really highly correlated right now. And when you get up moves in crude oil, when you get panic running into the energy sector, you could throw it. It doesn't matter. These are the times when the correlation of these things goes to 90%. It's nothing. I mean, it doesn't matter which. You find the ones that are most liquid. That's how you do it.
So you have expanded IV rank on all three of these instruments: XLE, XOP, OIH, and the individual instruments themselves. You would be doing what on a lot of these things this week?
Well, I can tell you what I've done. I'm short a lot of strangles in crude oil and different crude oil stocks, and I'm also I actually took a directional shot, and I'm short some call spreads in CL. I didn't want to sell naked futures just because you got that. You always have that risk in the back of your head. Who knows? I mean, I just didn't. I thought it was too early to get short naked futures, so I just sold some wide call spreads, and then I sold a ton of premium, and that's it. We'll see what happens.
I keep every week. I keep working on you, trying to get you to trying to get you to be bullish nuclear energy. You won't do it. You won't budge. You're like,
I don't know how to get long nuclear energy. It's not.
I've been giving you the instruments every time we come in here.
I know, but you give me instruments that nobody trades. I mean, I'm not a. It's hard to get an old dog to switch to some product that I've never seen, doesn't trade. Doesn't have liquid option markets.
You know what I was thinking about on Friday, just after the close, because I was trying to hedge. I'm a lot a bit overweight nuclear, and I was like, how do I hedge this exposure?
You can't.
Yeah, but there are uranium futures, and I looked at the volume on the uranium futures. Not a single one had traded on Friday.
We don't even support them.
Oh, I know. I got curious, but I thought one day in the future, Tom, there's going to be some retail traders, and they're going to trade uranium kind of probably the same way I trade crude oil today.
I don't think so. I mean, uranium's been around for a while, and it has been a failed futures product. You got to remember, I'm just saying, like they've tried trading a lot of stuff, over the years, and it's uranium. Pete can speak to it more, but they've tried. They can't get any retail customers to get it and to trade it, and they can't get any professionals. It's mostly whatever trades over the counter, and that's really by appointment.
Yeah. We're starting off earnings season this week. There's a couple of previous quarter reports, and then Friday will be the start of the new quarter with JP Morgan, Wells Fargo, BlackRock, and I think Bank of New York Mellon. None of these have really interesting implied moves. Like JP Morgan's like $6, $7, something like that. So they're all low percentages. Is Tom Sosnoff going to be playing the binary events here on any of these?
I don't like those.
They're too. I don't like implied moves like 2-3%. They're nothing.
I know. I don't like a 2 or 3% move on a $200 stock. I feel like a $6 move in JP Morgan is very, very difficult to hit. I'm also trying to figure out, like where did their profit when rates start to drop, I always get confused as how they make money. Like, I mean, I know how they make money when rates go up, which is why they've done the reason the stock went from, 130 to 200 and whatever is because for the last 2 years, rates have been going up. And when rates go up, as much as they don't want to admit it, that's how they make all their money. When rates start down ticking, like what's happened in the last quarter, especially all the short-term paper that they're in, I don't understand how they keep their margins where they are. So I would
the front end's going down, but the long end's not budging. If nothing else, it's been going up.
So the net interest,
the net interest margin, they're trading that curve. So the steeper the curve gets, the more money for the banks, right?
They almost put themselves out of business trying to trade that curve. So they don't tell me they're trading the curve. So the only thing they're doing, they're the worst curve traders that ever lived. So the only thing they make money on is what you have to realize how dumb banks are. It doesn't matter whether you're JP Morgan or Wells Fargo down to some regional bank. These are the dumbest financial institutions ever. They couldn't hedge a trade. They couldn't get out in front of a trade if they wanted to, if they knew it was coming. So the only way banks make money is when it gets basically handed to them, which means when rates go higher, their spreads go up. And when rates go lower, their spreads go down. So I have to imagine that they're being challenged this past quarter on rates dropping. And I just can't see how, I don't like the downside. I mean, if I sell anything, I'll sell calls. I don't like anything on the, I'm not selling puts with a $6 expected move.
All right. Don't shoot the messenger on this one because, I know it's not the most interesting trading vehicle, but this is the highest implied move for the week that I could find. Domino's Pizza, Thursday. Yeah. I think Thursday before. I forget if it's before or after, but it's got a 10% implied move.
Domino's Pizza is an amazing company because they've figured out how to maintain margins when nobody else can making pizza. It's all scale and cardboard or whatever the hell they use for pizza dough, but or whatever they use for cheese or whatever. They figured everything out. I'm not sure how they do it, but Domino's Pizza, from a trader perspective, is untradeable.
Yeah. All right. And then China just went gangbusters again last week, man.
Yeah.
Another 12-ish%, something like this to the upside.
Yeah. I mean, China went bonkers. You can't at these levels. I mean, they sold off a little bit, on Thursday, whatever it was, but at these levels here, you can't touch China unless you have some form of a short premium position or something like that. I mean, there's a lot of stock, and let's face it, we're record highs, right? We're pretty damn close, and you have a lot of stocks here that are you going to really chase Chinese stocks after they rallied, almost 30%? Are you going to chase? I'm not even sure where to start. I mean, are you going to chase Meta at $600 or, Netflix at $720 or, you could pick your poison. I'm not sure where, what's not crazy. I mean, there are a few stocks maybe that aren't crazy, but there's a lot of stocks back up near record highs and I don't know. A challenge.
I would say the price on Chinese stocks is crazy relative to itself over the last 2 weeks. The valuations on these, and I think Illy would disagree with me. I think they're still in the dirt. So I
Oh,
I think I bought some
on a
short-term puts
relative.
against my long stock position, but I don't want to pitch them just yet.
Oh, I'm not getting short them, but I mean, relative to where they've just come a long way in a short period of time. But one thing I'll say about China is that I think there was a rude awakening over the last couple of years with respect to how far, how far how far will let the markets, how far the Chinese government will let the markets go. And I think at one point when we believed that they truly had kind of like a free market, these stocks were trading $200-300. And when we realized that they don't, and at any point they can almost pull the plug, I think that's going to cap these Chinese stocks. So I think the upside is very different than it was, 3 or 4 years ago. That's all it
Mm.
is. I just don't think it's the same upside. But I mean, you also see how these companies, they were smart not to remove their listings from the U.S. and all that kind of stuff because it keeps them liquid. It keeps them global. It's important.
Mm. I like to, when stuff either pops or drops, I like to ask you whether or not you either catch a falling knife or fade a big move. Spirit Airlines murdered down to $1.40. It's
mean,
down like 25% on bankruptcy. Is
I
Tom
mean,
Sosnoff going in here and buying this as long
no,
calls?
no long calls. I mean, why would you just buy the stock for a
No,
dollar
that's what I'm saying.
twenty-five?
You're buying the stock is basically a long call. That's my
I
point.
mean, I wouldn't sell it here. I don't even, I mean, I don't travel on Spirit Airlines. I one time, 2008 was my last Spirit Airlines flight. It was my only way out of Florida one day, but, and it got me home safely. So I'm okay with it. But, I don't buy $1.25 stocks usually. I mean, I would say Spirit's going to go. My guess is it goes to zero and then they reorganize. They pull an American Airlines or they pull whatever. They basically go out of business. They declare Chapter 11. They reorganize. They get rid of their debt, and they come out and they totally screw the shareholders. They screw the bondholders because that's Spirit's mo. And then they relaunch the airline because they own some very valuable gates and uh, and they have gates in very valuable cities, and they have some routes that are, I assume, that you should be able to make money on. But I think carrying their debt load, the problem with Spirit right now is until they get rid of all their debt, until they change their shareholder base, they can't raise any money, they can't buy any new planes, they can't do anything. So I mean, who's going to lend them money? They got to come up with cash for everything. Now I don't even
Mm.
know if they can have a credit card to buy gas with. You know, I mean, I have bought tickets on an airline that was near going out of business, and that's about the most risk I'll take. And they have gone out of business. I've been
Hmm.
long airplane tickets on an airline that's going out of business. So I would say no, I will not buy the stock. I wouldn't short it, but I wouldn't buy the stock.
Fair enough. For everybody out there, I think Delta Airlines has earnings Thursday after the close. It's like a $3 implied move on a $50 stock, so not a
Yeah,
ton
that's
there
another
either.
one. I mean, that's another one where how do you trade a $3 implied move in Delta? I mean, that's nothing.
Hmm.
I'm just saying. I mean, Delta and United are really the only two airlines you can trade.
Yeah. Last one, just because, I'm just throwing up symbols here. Give them
Yeah,
some
go.
ideas. Albemarle,
What?
ALB. I think I'm pronouncing this right. I might be
I have
might
no
be
idea. I've never traded
Albemarle.
it.
It's a lithium company. They're a lithium miner.
No, I don't have any idea. You're
So
you're
they're
out.
up.
You're above my pay grade right now. Lithium miners, no.
That's all I'm doing, man. I'm buying lithium. I'm buying
Oh God.
nuclear. I'm buying China.
Okay, what everybody doesn't know about Victor is Victor's a prepper. Okay, he's he's a prepper, and like I got to put preppers in a separate category. Like you got a bunker in the back of your house. You got your, you know,
That has
y-
nothing to do with this. That has everything to do with us moving towards a more
I don't care. I can't deal with people like you that have like that's the mentality.
yeah, like the prepper stuff, that would be like my silver and gold bars and
Oh,
platinum
that's only part of it. I
and
mean,
palladium.
when you have a lot of freeze dried food in your house and you don't go
I
camping,
do.
that's a
I do.
prepper. I know, of course you do, of course.
Okay, that's what you say, and then all the toilet paper disappears and the
Yeah,
canned
of
goods are
course.
gone,
Yeah,
and
yeah,
now you're calling me, Tom.
yeah. Okay, all
All
right.
right, let's get
I'll take my chances.
let's get Pete in here. Pete, Matt, welcome to the first call.
Save me,
Gentlemen,
Pete.
great to be with you
I'm
tonight.
going to tell you what Pete is not. Pete is not a prepper.
I'm going to tell you what Pete is. Pete has been on the right side of the 210 yield curve for, I don't know, 4 or 5 weeks straight in a row. So Pete, I'm giving you your props where it's due.
I like this though. Victor. We can introduce everybody and say he is a prepper. He's not a prepper. She's a prepper. He's not a prepper. Pete, not a prepper.
Not a prepper. I don't have any freeze-dried food. The electricity goes, I'm pretty well done, and I'm dead in 24 hours. So that's pretty much it for me. It's right.
I'll talk to you about generators after the show. Pete.
Yes, we need to have that discussion because I am not prepped. So that will not end well for me when the apocalypse does come. So, but yeah, the uranium play, interesting. Lithium, they've thrown a lot of futures against the board. One thing that's actually stuck, and it's not for us yet. The product's not mature enough for us to trade yet, but lithium battery byproduct products are starting to get a little bit of legs to them. They're doing 600,000 contracts a day. They got 5, 6, 7, 8,000 open interest, not near where we need them to be tradable, but there is an interest in this renewable energies piece. So, a couple of years down the road, maybe those become interesting products for us to trade. Not near it right now.
Yeah. Pete, didn't there used to be uranium future?
There is. There still is a uranium future. Part of the problem is they've always had a challenge figuring out what the right deliverable underlying is, and having it be physically delivered is very difficult. So, I mean,
Kim Jong-un will just take delivery on a few contracts.
Tom, it's like that young kid you said to pick up your silver bars that one time from the Board of Trade. It's like, who's the new guy we can go to take the truck and pick up the uranium futures? So I think they've had a hard time picking what is an industry standard, and it's no easy feat to find the right index. And then if you're picking an index, you don't have the actual there's a reason they have physical delivery, not to make our lives miserable, but it forces prices to converge upon expiration, and it keeps some semblance of order. So when you don't have transparency in the index and you have a difficult to deliver market, it's hard to build an underlying futures product. So that is part of the challenge with where we don't see it. Now, CME does offer uranium, but they trade basically as blocks on a system called Clearport, which is institutional guys blocking trades for some sort of either hedge fund exposure piece or somebody on the use side looking to hedge some sort of exposure. But it's really not tradable for us.
Tony has a pickup truck, so he can pick up the uranium.
He's the guy. Here, look at it. This is great. We can take a vote right now. All in favor of Tony, say aye. Aye.
Aye.
Yeah, I'm for sure.
All right. He's in.
So here's the thing. Last week when you said you might play for the flattening of the yield curve, what I heard was I might want to go long bonds. Luckily, I didn't. But the bear flattening of the curve was just insane. We're now back at like 4 basis points or something, given the gigantic move in the 2-year. So the question I would have for you, Pete, is what do you do with this thing now?
It's a great crisis. So we're at 392 in the 2-year, 398 in the 10-year. So that went from almost 30 basis points of normalization, where the 2 was under the 10, to almost a flat push right now. Vic, now it gets tough. It's messy. They again overbuilt in too many rate cuts too aggressively. Now they're back to a sense of normalcy. They've knocked out I think we're down to. They've taken all the 50 basis point talk out of the Fed watch tool. So you got 25 in November, 25 in December. Who knows for the rest of the year? I think they've taken the over and under pricing they tend to do in rate cut and hike expectations out of the market. So actually, Friday afternoon, I covered my last of my 2s and 10s, and I don't know what the trade is right here. I think it's really sloppy. We can go a little further inverted, or we can go back to normalize a little bit. We'll get a kicker with CPI midweek, which will give us a little bit of a tell as to battling back against the outperformance of non-farm payrolls. So I think right now this trade is a little bit tougher. If you want to look at, honestly, Tom, you're buying some bonds. If I was to look at, if I wanted to buy yields, I'd probably buy 10s. I just wouldn't sell 2s against them right now. I actually like the 10s. I think are a little bit cheaper than the 30s. Good liquidity in the options if you want to play it from the short put side. So that's one way you could play that tradable range again. And I think that's the takeaway, guys. I don't think rates are going. I don't think we're going to see 120 or 125 in the notes, or 118 or 127 in the bonds. I think we're kind of done for a while. Mm-hmm. So I think you could trade the range if you get some bumps up in vol. It makes it interesting. I think for me, the takeaway last week was a little bit the dichotomy between, as you point out, Vic, those Chinese stocks continuing to tear. Some of the commodities that usually move with them, copper, gave back a lot of ground. Mm-hmm. Now we're higher tonight, but gave back a ton of ground after that. Kind of last Sunday, we saw an 18-cent rally in copper up to like 478. Again, it was a Chinese holiday, so it was thin.
Now, do you see that as the potential of the copper market is not confirming the Chinese market equity move, or do you think it was like you can have the two happening at one time because you had such deep valuations in China? You can see those go crazy to the upside as they get closer to a normalized valuation, and not see copper screaming to the upside at the same level? Or do you see the divergence as a potential problem for Chinese stocks?
And maybe I'm trying to get ahead of myself, because you look at the rallies in those stocks, and yes, they were so cheap and they're just part of the way back, but the pace of the move and the vol makes me want to pick a contrarian play in some of those Chinese stocks at some point this week. Aussie really got hit hard. Kiwi got hit hard. So the commodity currencies, copper, some of the metal, gold, silver back to 82, some of those things that you would expect if the Chinese stocks were going to continue to hold. And again, I would expect those rallies to hold in, but they've rolled over. Aussie rolled over pretty hard. Copper rolled over pretty hard. Gold, silver rolled over pretty hard. So I wouldn't be surprised to see, maybe we don't get a fall in some of these Chinese stocks, but maybe you can sell a little bit of premium in there, whether it's calls or call spreads, and you don't see them continue to rip to the upside. And that's something that pays.
Yeah, the IV rank on all of the Chinese stocks right now are insanely high. They're all hundreds.
Right. So that's, for me, rather than trying to pick out some of these spots where I think rates are going to be a little bit of a tougher trade now. We're kind of in they've backed out expectations. Too many, too few, and now they're kind of in the middle ground of we'll wait and see. So I think it'll be a little bit more range-bound trade. A little surprised to see equities rallied Friday, really strong NASDAQ at the end of the day, and they held on to. I thought we'd actually see a little lower opening today. SPOO's higher, NASDAQ higher. A little surprised by that. I don't have Russell NASDAQ on right now. I was expecting Russell to struggle a little bit more. It actually came in and performed pretty well on Friday. But I think that for me, the crude rally, biggest we've had in almost 2 years last week, that $8 rally. Granted, they're hanging on what happens in the Middle East, but it's a much more comfortable range. And what's interesting is we've rallied $7 in crude, almost $8 in crude Friday. And that backwardation of prices, which you would expect to expand, the front month getting much more expensive than the back months, actually is right above the 6-month spread is about $3. So when we were at 68, it was about $2.80. It's $3 now. So it really hasn't, the rally, well, maybe geopolitically induced, doesn't have a lot of legs behind it in terms of term structure. So Tom, you mentioned you're selling some calls, call spreads. I probably think at some point we'll probably see $70 oil before we see $80 oil. So I wouldn't mind looking at that. I think
there's a better chance. I don't think it's like this long-term play where you put it in your back pocket and you say, I'm just going to wake up when crude trades 60. I think it's the kind of thing where this week you could easily see, as easy as you could see up $2, I think you could see down $6.
Right.
That's all it is.
Yeah. And I think we continue to play within that sloppy range a little bit. GLD and gold both, and the one disconnect too, a little bit too, is FCX. You didn't see the confirmation bias there either that you would have thought. It's given back a little bit of that ground. Mm-hmm. Not as much as copper did, but copper has a little bit more elasticity than the minor. But they're great. Either one's a good proxy if you want to trade the base metals. So both of them give you an opportunity to do that. So a little bit of disconnect between some of the Chinese stocks and some of the things I think are correlated to them. Whether or not that divergence continues to diverge, I'm not sure, but I'd like to lean into that a little bit this week.
It seems like some of the plays that you've had on, you're either flat or you're reversing those positions or those opinions. Can I ask, what are you doing with the metals, if anything? So specifically gold, silver. Is this playable in any way in your personal opinion, or is this still sort of in this weird no man's land?
I think gold is rich right here. The gold silver movement tells you that, again, traditionally gold silver comes in we're out to 92, it's into 82. This is the number of ounces of silver into an ounce of gold. Relative value of two precious metals speaks to the underperformance of silver. What bothers me is I want to be a little bearish gold. IB ranks great in there. GLD, GC futures work. Micro gold contracts, great small way if you want to scalp it with just static deltas. I'm a little disappointed it doesn't roll over.
Mm-hmm.
It's going to become a little bit of a waiting game, and if the shorts get stale, maybe we print clearly through, $2,700. We've had a hard time holding above it, but I think I'd rather lean on a little short vol, but I want to be mindful that I'm not getting all these things too directionally one way. So
Mm-hmm.
I'm going to be a little bit more selective with the gold trading.
Right on. I tend to think the same way. Like, I would like to be short gold, but given all the geopolitical tensions in the world, it's hard to know when that, where that escalation stops. I'm still a little bit long silver, Pete. I'm curious at 32, which is, so you could look at this as a double top or just an area of previous resistance. Do you have strong thoughts on silver alone or just the gold silver ratio at 82?
I think if we see gold silver come back a little bit, it's going to weigh on the silver piece of a little bit. But when you look at this, is kind of stubbornly high tape action too, so I wouldn't be inclined to necessarily run to start selling premium here, selling calls, excuse me, on the upside right now. So I think that there's still I wouldn't buy it up here. Too big a rally for me, but I'm not in a rush to sell silver right now. I would still prefer, if I was to pick one, I'd pick gold.
Yeah. Tom, you said, I think you said crude was going to be the only commodity you found interesting. Do you have anything on gold and silver?
I do, but I don't find them interesting. I do. I have positions on gold and silver, and I usually always keep positions in gold and silver, but to be specific,
they're not interesting.
They're not interesting. Yeah.
They're not interesting. Okay. Now they have beaten up yen incredibly. You call this one.
I have not got out of my long yen, but the yen has dropped from almost 72 back into the 67 handle.
Right.
I mean, the yen, euro, everything has gotten, obviously they got hype. This is what happens when things get hyperbolic. Right. This is why I'm so bearish in crude oil right now. But when things go hyperbolic, gravity at some point tends to take over at some point, because remember, this is not price, determined by the yen. Is not price in the yen is in all commodities a little bit different than it is in like stocks or something like that. And so as far as I'm concerned, now is probably when you want to be selling some puts in the yen, but you can sell them in the euro if you want. You can sell them in the pound. It doesn't matter. Pick your poison. Any one of I think you got to get short dollar here. Nice little rally, nice little bounce back for the dollar. I don't think it's going anywhere. I think you got to get short dollar here.
Really? Well, the one I'd argue against is pounds, Vic, if you remember.
Mm-hmm.
Pounds have held on surprisingly well. I mean, granted, we were up to 134. We've come off a little bit here, but things like pound yen are interesting to me. If you want to learn a little bit about that, tune in tomorrow at 6:30 for Forex Focus. Please excuse the shameless plug, but Frank Caberta and I talking all things Spot FX, good stuff. You guys don't want to miss it. Kick off the day with a little bit of overnight access and some Forex trading. So pound yen, really probably one of the biggest movers in terms of the currency pairs, more so than any of our dollar pairs last week. So if you're looking for extremes, that would be one that I would think would be a little bit interesting. I'm surprised at the continuing equity, NASDAQ strength we're seeing again play through tonight. I honestly thought they would have given back a little bit of ground because I respected the movement off the non-farm payrolls. I just think it's a meaningless number. It's backward looking. It's constantly revised.
Agreed.
So there's got to be a little bit more traction out there than I think. So I'd probably take a stab at the short side at some point, especially in some of these high flyers, but maybe we need a higher opening to do that from.
Well, hopefully we get it, because I would like to take some short deltas here too on a few of these high flyers in the tech sector. Pete, thanks as always, my friend.
You bet, guys. Have a great night. Thanks.
You too.
We're heading off to another non-prepper, just so you know, Victor. Your best bet for a prepper is to tune in tomorrow morning for Tony Batista, because he's probably most aligned with your prepper stuff. But Ilya, he's a lock non-prepper.
Oh yeah, I agree with that. What's up, Ilya?
Definitely not a prepper. Probably should be more of a prepper, given how hot it is in the Bay Area this week, and I probably should have been readier for it. But yeah, definitely not.
You'll all see. You'll all see that Bank of America balances to zero. That's just the start. You'll see one of these days. We'll get back to self-reliance, but we're gonna have to do it the hard way. We're gonna be forced into it. You'll see.
I'm gonna have to re-unlock the old Soviet part of the back of my head and remember how to do it.
If you find yourself buying freeze-dried food at Eastern Mountain Stores or REI, whatever they're called, then you've gone off the deep end.
That's the hilarious thing, that you think preppers shop at REI. High-end outdoorsman stores.
No. I don't know where preppers buy their stuff from. I'm sure there's a website like Preppers Are Us, and and there's Costco for preppers, I'm sure, but I just don't know what it's called.
If there's not a Preppers Are Us, somebody needs to buy that domain immediately.
Yeah. No, there's like a Costco for prep. I mean, we have the Costcos for everything right now. There's some giant superstore somewhere located in the middle of this country, God knows where you can buy everything from a cave, a tunnel. You can, God knows what you can buy. I'm sure.
I love your idea of the prepper is about more consumption. The idea of the prepper is it's totally away from consumption and being self-sustaining. But your idea of it is there's got to be a store somewhere.
I imagine there's a superstore somewhere where you walk inside and they just show you different bunkers, and like you just go from bunker to bunker, and they're like, oh wow, this is a cool bunker, I need this one for my backyard. It's like, instead of installing a pool, you just put a bunker in your backyard. They do the whole thing for you. Here, $72,000 with a big bunker with air conditioning, a cot, and 75 years worth of food.
Yeah, that it is perfect. That your idea of prepper is going to a store and there's some concierge that comes up to you and you just tell that concierge what you want, and then they give you all the things you need to be prepared.
Exactly.
That part of Costco where they sell you a hot tub or a garage door.
Yeah.
Only caves.
Say, what are you most scared of? Like, is it nuclear? Is it weather related? Like, you tell me what it is, and we'll sell you the right kind of bunker. It only makes sense. That is the beauty of America. That's what we thrive on.
Ilya, do me a favor, man. Take us back to the non-farm payroll report. Say
something about the markets.
The non-farm payroll report, the impact into both equity assets and interest rates, and then how you see risk lining up this week.
Well, I mean, I think it's pretty clear what we saw last week, right? So you get a bunch of hot numbers. NFP is not the only one. You get ISM was hot as well. And look at the response that you see across markets. It lines up. So yields go higher. Dollar goes higher. Very clearly, looking at Fed funds futures, you've shifted to a lower setting on how many rate cuts the Fed is expected to do. At this point, the likelihood of a second cut this year is hanging on by a thread. It's like 36 basis points baked in until the end of the year now. So you're looking at one cut for sure and about a 52% chance for a second. So it's real thin now. And then next year, they've marked it down to 96 basis points from like 130. So very clearly here, you have a response from markets that goes, the Fed is not going to do all of these cuts because this data is too hot. And then Powell comes out at the beginning of last week and basically says that. So this week, it'll be interesting because CPI is on, FOMC minutes from the meeting where they did the 50 basis point cut and there was the dissent, that's on. So Bowman, who was the dissent, has been talking up a storm.
She's going to be, she's got a bunch of speaking engagements. In fact, all these Fed speakers are, I lost count of how many times they're going to be speaking.
So many. And she's been talking a lot.
Don't you guys ever, do you ever just take a step back to realize that it's self-fulfilling? The only way you make money as a Fed governor is all your speaking engagements where you charge 50 to 150 to 250 grand for a luncheon. And so the more fear you create, the more value you built up for your own
I don't really worry about that kind of thing.
No, I don't worry about it. I'm just trying to explain to Mr. Jones
look at it and go,
people are talking.
No, I just look at it and go, are the markets responding? Is the price action moving in a way that's consistent? And it is, right? Hotter data, stronger dollar, higher yields, lower bonds, all of that makes sense. All of that is understandable. And so if that's what the markets are doing, so it goes. For me, as ever, it's the price action. So this week, there's going to be more in that story. We'll see what the price action does. I've been long dollars for a few weeks. I'm still long dollars against pounds, against Aussie, against euro, against yen. So I have a big basket of that on. I missed the window to sell the bonds last week because on Thursday there was a holiday and I wasn't looking at anything. And so I missed my chance. So now I'm looking at maybe looking for a bounce somewhere near 120 on ZB, 120, 121, maybe, but we'll see. Until I see it kind of find something there and start to come off, I usually am not just going to attempt to pick a bottom. I generally want not the perfect low, but some degree of confirmation. And 121, 120 seems like an area where there's some friction. So that'll be interesting. I think the Aussie, to Pete's point, is really interesting because it's not confirming the China move at all. And neither is copper. Again, hat tip to Pete. Vic, you and I talked about this on The Price of Truth last week, that you get this move basically onshore in China, but it's only onshore in China. It doesn't exist in emerging market stocks excluding China. It doesn't exist in copper. It doesn't exist in Aussie, and that's weird. So I'm going to be watching the Aussie closely. There's meeting minutes from the last RBA meeting, and they've been really hawkish, and their own markets have been yelling at them to stop it. So that'll be an interesting kind of thing. The Aussies, one of those rare assets here that the news is all going in its favor and it can't rally, which means that it's really weak. And so I may want to lean in even more short if it breaks down. And then the other thing I'm looking at, obviously, is crude. It's right in the middle of its 2.5-year range. Like 73-ish is basically the middle of the range since June of 2022. And it's decision time here. If the U.S. economy is really heating up, Vic, you and I also talked about this last week, where crude might actually move higher in a more lasting way, really only if there is a real demand story. So if the U.S. economy is actually stronger than everybody thinks, and we're going to basically give China the benefit of the doubt on the stimulus, then you could see crude go higher just on supply-demand grounds. Geopolitics hasn't been a lasting catalyst. It hasn't worked. If it's only geopolitics, it should fade. So I'm watching very closely here to see if there's an opportunity to kind of get some clarity.
You got any? Do you have any thoughts on Thursday's CPI? What to expect? Or do you not play it that way? You just kind of
so I don't
I'll see what the
really
report is
trade
with
the
price
event
action.
So yeah, I don't really trade the event risk. I think to try to trade macro event risk is kind of a fool's errand. It's a really good recipe to get your head kicked in, because you can never say, oh, the number is going to be up, so the asset's going to be up, because it's never that simple. There's rate hikes that have given you a weaker currency. There's good economic data that's given you a bad outcome from the underlying assets. It's all a matter of perspective and where the market is sort of thinking about the overall story. So CPI for me is an interesting setup because it's expected to tick higher. The markets are being told the US economy is stronger, and the Fed has to basically walk back some of these cutting intentions. If CPI is a bit higher than expected, which the service sector ISM kind of hinted it might be, then you lose more in the cuts for next year. The long bond goes lower. We'll see how much lower. And then we'll see if stocks can digest it. One of the most interesting things in NASDAQ is it broke back under August's high and is struggling to get back through it again, which makes the last break higher look like maybe that was a false blow off top, some kind of something. And so I'm a little bit short here. It's via put spreads, so I'm very risk defined. My risk reward is very locked in. And so I'm watching this closely and seeing maybe if yields go still higher, risk finally wobbles.
Tom, last thoughts for all the traders out there as we get ready to go into a brand new week, a week after energy rocked, nuclear rocked, China rocked, crude oil rocked. What are your final words of wisdom for all the traders going into the week?
Well, last week we had quite a large expected move for the week. Like it was up like almost 50% from the week before. I think this week you're going to see a very different story, I think. But we are getting into, this is a very big October cycle we're getting into now. You've got people rolling positions in November. You've got elections coming up. You've got all the normal, October volatility. So I think we're not going to see, I wouldn't expect to see anything that's like, I wouldn't shoot for calm in the next 3 to 4 weeks or anything like that, or into the middle of November. So, heading into maybe just before Thanksgiving or something, you can see things start to slow down a little bit. But from now until we get basically to the second or third week of November, I think you're going to see markets that are very choppy all over the place. I don't think you're going to see between now and the election, I don't think you're going to see anything as far as an extended move one way or the other. I think last week was a little bit of an outlier, and I expect these markets to come back a little bit this week, meaning, again, I'm going to side with Illy on this one. And I think that the velocity of risk is to the downside because there's so many stocks that I feel like they've blown their brains out. I mentioned some of them before, and I don't think that any of the big name stocks are very cheap right now. I mean, yeah, you're going to find some cheap stocks like, Boeing's still cheap. And just looking at my board, like you'll find a few scattered in there, Intel, Boeing. I don't even know. I don't want to go through the whole list right now, but, maybe Google and a few others like that. But generally speaking, you've got a lot of stocks that are, they can't handle the bad news here. They're fully priced. They're priced to perfection. There's way too many stocks priced to perfection right here. And there's too many things that can happen in the next couple of weeks. So,
price for perfection. That means all these companies got to show up with the goods on these earnings reports as we get ready to enter into a new earnings season. Words to live by.
And I don't think the dollar move is going to help a lot of these multinational companies. What's happened over the last couple, I just think they're going to be challenged. I don't think that it's going to be as advantageous for them as it's been, when the dollar was so much stronger. So I think that, I think there's going to be some challenges on the earnings front.
All right, everybody, that's going to do it for us. Before you get out of here, do us a favor, hit the like button, subscribe to the channel if you have not already. For Ilya Spivak, For Pete Molmat, I've been Victor Jones. On behalf of Tom Sosnoff, thanks everybody for tuning in. We'll see you back here tomorrow. What time do we start now? Like 1 a.m?
We start 1:30 in the morning with Angie and Rich in London.
Yeah,
and then Pete and Frank start at 6:30 in the morning Central Time, and you wrap up at 6:30 at night Central Time. So we go 12 hours in the U.S. and we start 5 hours at 1:30 in the morning, starting in London time. I mean, starting Central Time, but it's 7:30 in the morning London time.
No AI, but somehow you're managing to squeeze out an additional 50% productivity from this group.
Well, it's just it's my cherry bomb's on tonight. It's about the threat of AI. That's we're using that to, to basically hold our employees hostage here. If you don't deliver, Victor Jones, you're going to be replaced by a bot that walks like you, talks like you. I don't know if I can get one that thinks exactly like you, because we'd have to break something, but we're going to do our best.
All right, man. We'll see you guys in the morning. Peace.
All right. Ciao, boys.
Mean when they say to catch a falling knife. Ever seen a stock make a huge move lower, and maybe you had the thought, I'm gonna buy that stock, but then it just keeps going down? That's a falling knife. A falling knife